Look, I need to show you something that's happening right now in the precious metals market that most people are completely missing. And if you have money sitting in traditional retirement accounts, this is going to make your stomach turn. Silver just posted a 128% gain while gold climbed 66%. Both metals are hitting all-time record highs. And here's what nobody's talking about. This isn't just a rally. This is the beginning of a fundamental restructuring of how wealth is stored globally. Let me paint you a picture of what's actually happening behind the scenes. Central banks around the world are buying gold at the fastest pace we've seen in decades. Not just any central banks either. We're talking about China, Russia, India, Turkey, Poland. These aren't small players making symbolic purchases. They're accumulating thousands of tons of physical metal and moving it into their vaults as fast as they can. Why? Because they see something coming that most retail investors are blind to. Think about your retirement account for a second. If you're like most people, you've got money sitting in stocks, bonds, maybe some mutual funds, traditional assets that have been the backbone of retirement planning for generations. But here's the problem. All of those assets are denominated in dollars, and the dollar is in serious trouble. I'm not talking about some conspiracy theory or doom and gloom prediction. I'm talking about mathematical certainty. The U.S. national debt just crossed $36 trillion. That's trillion with a T. The interest payments alone are now exceeding defense spending. We're printing money to pay the interest on money we already printed. This is not sustainable, and the smart money knows it. So what are they doing? They're getting out of paper assets and into hard assets. Physical gold and silver that you can hold in your hand. Metal that has been recognized as real money for 5,000 years of human history. Now, let me tell you a story that perfectly illustrates what's happening. Back in the early 1970s, there was a guy named Harry Brown, financial advisor, pretty sharp guy. He noticed something strange happening in the gold market. The U.S. had just closed the gold window, meaning foreign governments could no longer exchange dollars for gold at the fixed rate of $35 an ounce. Nixon made this move because too many countries were showing up asking to trade their dollars for America's gold, and the vaults were getting emptied. Harry Brown told his clients something that sounded crazy at the time. He said gold was going to go from $35 to over $200 an ounce. People laughed at him. They said he was a fearmonger, a gold bug living in Fantasyland. Gold hit $850 by 1980. The people who listened to Harry Brown multiplied their wealth by 24 times. The people who laughed at him watched their purchasing power get destroyed by inflation. We're in a similar moment right now, except this time, the numbers are bigger. The debt is bigger, the money printing is bigger, and the potential move in precious metals is bigger. Here's what most people don't understand about gold and silver. They think of them as investments. They're not investments. They're insurance. They're the fire extinguisher you hope you never need. But when your house is on fire, it's the most valuable thing you own. And right now, the financial house is on fire. Inflation is running hot despite what the official numbers tell you. Go to the grocery store, fill up your gas tank, try to buy a house. You know the real inflation rate, and it's not the 3% they're reporting. Your retirement account is losing purchasing power every single day. Even if the number on your statement stays the same or goes up a little, what that money can actually buy is shrinking. You're on a treadmill that's speeding up, and you're getting more tired trying to keep pace. This is where precious metals come in. Gold and silver aren't just holding their value. They're exploding higher because they're the escape hatch from this monetary madness. When currencies lose value, metals gain value. It's not that gold is going up. It's that the dollar is going down, and gold is simply reflecting that reality. Let me give you some specific numbers that should wake you up. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been historically around 15 to 1. For most of human history, that's where it traded. Right now, even after silver's massive rally, the ratio is still elevated. This tells us that silver has enormous room to run. When this ratio normalizes, and it always does eventually, silver is going to make moves that will seem impossible to people who aren't paying attention. Industrial demand for silver is through the roof. Solar panels, electric vehicles, electronics, medical applications. Silver is being consumed in industrial processes at a rate that far exceeds new mining supply. Unlike gold, which mostly just sits in vaults, silver gets used up. It's gone, and we're running out of above-ground stockpiles. The Silver Institute just released data showing that investment demand in retirement accounts is surging. People are waking up to this. Superannuation accounts in Australia, 401ks in America, pension funds globally. They're all starting to allocate to physical precious metals because they understand what's coming. Now, I want to take a quick 30-second detour here because this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I put together a free guide that covers exactly how to get physical gold and silver into your retirement account without triggering tax penalties. It's in the description below. This isn't about selling you something. It's about making sure you understand your options before it's too late. Check it out if that's relevant to your situation. All right, back to what's happening in the market right now. Let's talk about the COMEX because this is where things get really interesting. The COMEX is the commodities exchange where gold and silver futures are traded. It's supposed to be a market for actual physical metal. But here's the dirty secret. It's mostly paper contracts. For every ounce of physical gold in COMEX vaults, there are hundreds of ounces of paper claims on that gold. It's fractional reserve banking applied to precious metals. As long as everyone's happy holding paper contracts and nobody asks for physical delivery, the system works fine. But what happens when people start standing for delivery? What happens when they say, "I don't want your paper contract, I want my metal"? We're starting to see stress fractures in this system. Delivery requests are increasing. Premiums on physical metal over the paper price are widening. This is a sign that the paper market is losing credibility. And when that credibility breaks completely, the price of physical metal is going to gap up so fast it'll make your head spin. Think about what happened with GameStop and AMC. Retail investors figured out that hedge funds had shorted more shares than actually existed. They started buying and holding, refusing to sell. The short squeeze that resulted sent prices to the moon. Now imagine that same dynamic, but instead of a video game retailer, we're talking about monetary metals that have been manipulated for decades. The short squeeze in silver alone could be the trade of the century. Central banks understand this. That's why they're buying physical gold hand over fist. They're not buying paper contracts. They're taking delivery of actual bars and storing them in their own vaults. China has been particularly aggressive. They've been accumulating gold for years, and many analysts believe their official numbers vastly understate their true holdings. Why would China hide how much gold they have? Because they're preparing for a new monetary system, one where the dollar is no longer the world's reserve currency, one where trade is settled in gold-backed currencies or in gold itself. This isn't speculation. This is what the BRICS nations have been openly discussing. Brazil, Russia, India, China, South Africa, and now dozens of other countries joining them. They're building an alternative to the dollar-based system, and gold is the foundation. When this transition happens, and it's not a matter of if but when, the price of gold is going to have to reset much higher. Some analysts are talking about $10,000 an ounce. Some are saying $20,000. The exact number doesn't matter. What matters is that it's going significantly higher from here, and the people who position themselves before the reset are going to preserve and grow their wealth while everyone else watches their purchasing power evaporate. Let me tell you another story. In 2008, during the financial crisis, most assets got crushed. Stocks collapsed. Real estate collapsed. People's retirement accounts got cut in half. But gold? Gold went from around $800 an ounce to over $1,900 by 2011. The people who had allocated even a portion of their portfolio to gold were protected. They had a lifeboat while everyone else was drowning. We're heading into a crisis that's going to make 2008 look like a warm-up. The debt levels are higher. The derivatives exposure is higher. The systemic risk is higher. And this time, the Federal Reserve has already used up most of its ammunition. Interest rates were at zero for years. They printed trillions of dollars. When the next crisis hits, what are they going to do? Print even more? That just accelerates the currency debasement and drives people into gold and silver even faster. Here's something most people don't think about. Gold and silver aren't just protection against economic collapse. They're protection against government overreach. When governments get desperate for revenue, they start looking at where the wealth is stored. Bank accounts can be frozen. Stocks can be taxed. Real estate can be seized through eminent domain or property taxes. But physical gold and silver that you hold yourself, that's outside the system. That's true financial sovereignty. I'm not saying you should put everything into precious metals. Diversification is important, but if you have zero exposure to gold and silver right now, you're taking a massive risk. You're betting that the current monetary system is going to hold together. You're betting that governments are going to suddenly become fiscally responsible. You're betting that inflation is going to magically disappear. Those are bad bets. The smart play is to take a portion of your retirement savings, maybe 10 to 30% depending on your situation, and move it into physical precious metals, not mining stocks, not ETFs. Physical metal that you can hold or that's stored in your name in a secure vault. This is your insurance policy against monetary chaos. Let's talk about timing for a second. People always ask, is it too late to buy gold and silver? They've already gone up so much. This is the wrong way to think about it. Gold and silver aren't going up. The dollar is going down, and the dollar has a lot further to fall. We're in the early innings of this move, not the late innings. Look at the chart of gold priced in other currencies. Gold in Japanese yen is at all-time highs. Gold in British pounds is at all-time highs. Gold in euros is at all-time highs. This isn't just a dollar story. This is a global currency debasement story. Every major central bank is printing money and debasing their currency. Gold is simply reflecting that reality across all currencies. Silver is even more interesting because it's both a monetary metal and an industrial metal. The industrial demand alone is enough to drive prices higher. But when you add in the monetary demand, the investment demand, the short squeeze potential, you've got a perfect storm brewing. Silver could easily outperform gold by a factor of 2 or 3 in the coming years. Here's what keeps me up at night. Most people are going to wait too long. They're going to watch gold hit 3,500, then 4,000, then 5,000, and they're going to keep thinking it's too expensive to buy. Meanwhile, their retirement accounts are losing purchasing power every single day. By the time they finally decide to act, the price will be so much higher that they'll have missed the bulk of the move. Don't be that person. Don't let normalcy bias keep you trapped in a system that's failing. The warning signs are everywhere. Record gold purchases by central banks. All-time highs in both gold and silver. Widening premiums on physical metal. Increasing delivery requests on the COMEX. These are flashing red lights telling you to take action. I want you to imagine something. Imagine it's 5 years from now. Gold is trading at $8,000 an ounce. Silver is at $200 an ounce. The dollar has lost half its purchasing power. Your retirement account, if it's still in traditional assets, has been devastated. You're looking at working years longer than you planned. Your retirement dreams are gone. Now imagine the alternative. You took action today. You moved a portion of your retirement savings into physical gold and silver. Those metals have multiplied in value. Not only have you preserved your purchasing power, you've grown your wealth. You're on track for the retirement you always wanted. You can sleep at night knowing you're protected against whatever economic chaos comes next. Which scenario do you want to be living in? The choice is yours, but the window to act is closing. Every day that goes by, more people wake up to what's happening. More money flows into precious metals. The price gets pushed higher. The opportunity to buy at today's prices gets smaller. Here's the bottom line. Your retirement account is in the danger zone because it's denominated in a currency that's being systematically destroyed. The people who understand this are moving into hard assets. They're buying gold and silver. They're taking physical delivery. They're protecting themselves against the monetary chaos that's coming. You can either be proactive or reactive. You can either position yourself now while there's still time, or you can wait and hope everything works out. But hope is not a strategy. Hope doesn't protect your retirement. Action does. The metals market is sending you a signal right now. Record highs, massive institutional buying, supply shortages. This is your wake-up call. This is the market telling you that something fundamental has changed. The old rules don't apply anymore. The old assumptions about retirement planning are obsolete. I've shown you the data. I've shown you the trends. I've shown you what the smart money is doing. Now it's up to you to decide what you're going to do with this information. Are you going to take action, or are you going to hope for the best and risk losing everything you've worked for? The danger zone is real. The threat to your retirement is real. But so is the solution. Physical gold and silver have protected wealth through every crisis in human history. They're going to protect wealth through this crisis too. The question is whether your wealth is going to be among the wealth that's protected. Don't wait until it's too late. Don't wait until everyone else has figured this out and the price has already exploded. Take action now, while you still can. Your future self will thank you for having the courage to act when it mattered most.